Coming to you on a lousy day in Park City. It's raining cats and dogs, and to make it even lousier, the stock market dropped 725 points today. So I bring you another bout of bad news. Sorry about that. After a while, you're going to look at my picture coming over the computer, and you'll hide under your desk. But hopefully, we're going to have good news coming to you soon. Today the market dropped for many reasons. There's a bunch of dysfunction apparently in the White House. Trump's attorney quit. Whether it's over Mueller, whether it's over something else, we don't know. This business about porn stars, and now there was a lawsuit filed by another lady in New York about sexual harassment with the president, and they want to have a deposition in the White House. I mean, this is just getting ridiculous. Mueller is goose-stepping around the Capitol, going through any door that he wants to go through, and in total, after over a year of this, it's becoming somewhat disruptive. So one can understand how difficult it is to conduct business from the executive branch today. The big news, though, the bad news, is a $60 billion tariff against China that the president put in place today. His Commerce Secretary, Wilbur Ross, tells us that it's $60 billion is peanuts to the Chinese. However, our trade deficit with China is, call it $380 billion. I don't know exactly what it is, but for people to trade with the United States, they have to make a profit. So how much profit comes out of a $380 billion trade deficit? Maybe $60 billion? Well, that's what we're forcing them with a tariff. So in essence, we could be taxing away the entire profit that China gets for trading with the United States. So it might be a lot deeper, might be cutting a lot deeper than appears on the surface. Hopefully you read my comments of last week about trade tariffs and chasing trade deficits for the sake of chasing trade deficits and doing away with them. We think it's erroneous thinking, we think it's faulty, and we think it's dangerous. And as indicated last week, if the president pursues the trade deficit issue with more and more blanket tariffs, we could trigger a trade war, and the outcome of something like that just gets uglier and uglier and more devastating financially. So we have become necessarily more defensive. Today, another technical piece broke, and we're really hanging by a piece of dental floss from the positive standpoint on a bull market. As long as we don't penetrate the old low of 23.3, we're technically okay. But that's not far away. At 700 points a day, we'll be there tomorrow. And after that, it's confirmed bear market to our way of thinking. So the firm today is more defensive than it was a day prior, and we've been gradually getting into that position. So we now have, in a typical client account, more cash, treasury bonds, short-term treasury bonds, than we do common stock. So we indeed are getting quite defensive, but we intend to, if the lows break, get even more defensive to protect your capital. That's just our DNA. You know this over the years. I hope that in searching for a bottom here, the market scares the administration into some sanity and some logical thinking about this trade posturing situation. But we have to see. We'll watch every move they make, everything they say very, very closely. But as of right now, it looks fairly dim. And I'm sorry about the bad news, but it is what it is. Try to have a good day.